Yo, yo, yo. Hey, I'm Mark Buckner with the Mark Buckner Group at Compass Realty. And on this channel, we talk about living in Chicago, buying, selling, investing, and renting, along with property management. So today I have Kobe Green with me, who's a real estate attorney, also does estate planning. So if you need help with that, there's contact information in the video for that for him. But I wanted to talk about real estate taxes. We talk about this a lot with our clients. It comes up often. So wanted to put out some educational information on that since we have this conversation a lot. So first off, tell me real estate taxes. What are they? When do we get this type of bill? How often do we get this bill? Tell me about that.
Yeah. So real estate taxes is taxes you pay for owning real estate. Simple as that. In the state of Illinois, we pay real estate taxes a year behind, which means this year in 2024, we're paying 2023 taxes. Next year, we'll pay 2024 and so on. This is because in the Great Depression in the 1920s, 30s?
1920s.
Thank you, sir. They gave everybody a one-year tax holiday. So you can take a year off of paying taxes. The bills are still due. So we haven't bothered to catch up to that yet. So tax bills come out different years, different times of the year in different counties. Cook County, where you and I do most of our work, it comes out in 2 installments. The first bill is due typically March 1st or March 2nd of the year, and the last bill is due typically July, August of the year, though sometimes it runs a little bit later.
Yeah. So let's maybe use an example. So I have a tax bill right now. So yesterday I actually stopped at the bank, paid my first installment. I was late, so I think I paid an extra $200. Don't be late.
Yeah.
Right. It's money I just gave away. I cringed when I ended up doing that.
That's 1.5% per month of the bill. So that's 18% a year. That's big interest. It's not as bad as credit cards, but it's still big.
Yeah, exactly.
Yeah.
And so they come out. So that was my first installment for 2023 because we're in 2024.
That's correct.
Right?
Yeah.
So because the government gave that free month, right, that free year, they didn't have to pay it. So we're continuously in arrears.
Exactly.
Right?
Yeah.
So let's use an example. So if I'm buying a house, or let's use kind of rounded numbers and rounded months. So a client's buying a house, they're going to close July 1. How do taxes get resolved?
Yeah. So generally, if you got the same property you own year after year, it doesn't matter to you because you just pay the tax bill that comes out that year and you're fine. When you're buying or selling, it matters because you're now as the buyer, you're going to get stuck with a tax bill that should be the seller's responsibility. So what happens is the seller will give you.
Why is it the seller's responsibility?
Because it's the tax bill for. So like if you're buying this year, right, the seller will have paid the first installment for 2023.
Yep.
Won't have paid the second installment for 2023, which was last year because it's out.
Very good.
Won't have paid anything for 2024, right?
Very good.
Okay.
So they'll owe like 12 months of taxes.
So they'll owe like 12 months of taxes.
Cool.
The math is a little bit different, but for approximation purposes, that's close enough. And that tax bill is going to come out later on when you, the buyer, own this property and the seller is gone. We don't know where the seller is. They might have moved to California. We don't know where they are. And the point is we're not going to track them down. So what we do is we have them give you a credit beforehand so you've got the money sitting there to pay the taxes. Now, when you go to sell this property 5 years from now, 10 years from now, you'll do the same thing for your buyer. But getting back to our transaction, so what we do is we usually calculate how much we think the tax bill is going to go up. And a good rule of thumb in Cook County is maybe it'll go up by 5% a year. So we take the tax bill we do know, which was the 2022 tax bill now.
Because we only have the first bill from 2023.
Right. Cook County is a little bit strange. All the other counties get their tax numbers out with the first installment. In Cook County, you get your final number at the end.
And so the first bill comes out, and I think you told me before that that's 55% of the total bill.
That's right.
And then in July, we'll get the second one.
Yeah.
So we're going to do 105% proration for 2022. We're going to prorate it 105% based off the 2022 tax bill. And then we're going to get, that buyer is going to get a credit from the seller at the closing table
Yep.
to go towards that second installment
Yep.
in July 1
Yep.
for the 2023 second installment, and then in
2024,
February 2024, they'll get the first bill
yeah,
for 2024
Yep.
in February of 2025.
that's correct.
It's like a tongue twister.
It really is. It really is.
But not having a diagram, but we'll put up a little diagram, and
Yeah.
Miss Bridget will edit that in. That's our editor. If you need a social media editor, Bridget, she's awesome. We'll put her contact information in there for you. But so when you're buying, there's going to be a bunch of closed credits and debits, but you're going to get credit to go towards this. And then who takes that money? That credit comes to me, or?
Well, that's if you're buying with cash, that comes to you.
Okay.
If you're buying with the mortgage, as most people are, because you don't have like $500,000 or $750,000 lying around in the bank in cash to put down on a property, it mostly goes to the bank. Because the other thing you're gonna wind up with taxes is you're getting a mortgage, so you're getting a bank that's paying like 80 to 90, 95% of the purchase price. They're not going to trust you to pay your own tax bill. Okay, because they're just not. It's more their money than your money in this house. They're not trusting you. So they're going to have this thing called an escrow account that's set up. And what that's going to do is it's really a budgeting tool for the buyer, because that is going to have the buyer paying like 1/12 of their tax bill every month, an estimated 1/12 of their tax bill every month, in addition to the regular principal and interest on their mortgage loan. And the bank is going to hold that in a separate account called an escrow account. They sometimes also use the term impound account. And that money is going to be sitting there. It's going to be used to pay the tax bill when they come out. Because, normally, your mortgage payment might be, $4,000 a month or so, and then your tax bill comes out and it's, $6,000 or $8,000, and it's all due at once. And, you can afford $4,000, you're buying this house, you can afford $4,000 a month, but maybe you don't have the extra $8,000 to just throw all at once in a month. So
they help you save.
So they help you save.
They help you save for that bill when it comes out.
Exactly.
And they're going to hold you accountable.
They're going to.
But that money that gets credited, they're going to hold that money also. So when that old bill, the bill that the seller accrued that you got credit for the second installment of 2023, they're going to have that money credited, and they'll pay that bill.
Right.
Okay.
Well, they're going to hold an amount. It doesn't necessarily math out to the same, but they're going to hold an amount that they need. You're going to get a credit for what you're getting a credit for, and it'll all work out.
Cool.
Yeah.
So, and listen, the reason why I paid my bill late, right? So I don't have the bank taking out the money on me. As a result, I need to make sure I come up with that note, which was a hefty note. And it wasn't fully ready when it came out, even though I should know. So we were a few months late. But the other thing that I want to talk about, and this is something that is important for everyone to know, and I want to know how it's supposed to get set up, because it doesn't seem to always get set up. And maybe that's something to do with the title company or Cook County in general.
Talk to me.
But we get some homeowners exemptions sometimes. Who qualifies? What do they qualify for? What does it come out to be? Tell us about that.
Gotcha. So there's four categories of exemptions, four basic categories of exemptions. One is just a straight homeowner's exemption. So if you own your own home, you get that exemption. Then there's a senior citizens exemption. That's if you own your own home and you're over 65 years old. Then there's a low-income senior freeze. That's if you own your own home, you're over 65 years old, and you make less than $65,000 a year. Then there's a disabled veterans exemption. That's if you own your own home and you're a disabled veteran. And that is, if you happen to be a disabled veteran, that is a huge exemption for you, because it can bring your tax bill all the way down to zero.
Wow.
Yeah.
That's awesome.
Yeah. The other ones, the homeowner's exemption, by contrast, is typically a reduction of about $700-ish off of a typical tax bill in the city of Chicago. It's a little bit higher in the suburbs because, well, the math is complicated, and I can get into it in a more detailed thing if you wanted to. But it's typically it's based on whatever the tax rate is, and the tax rate is generally a little bit higher in the suburbs because they're spending more for different purposes.
How do I apply for my homeowner's exemption?
Right.
Most of the clients we work with, it's going to be their primary residence. How do they apply for that? How do they secure that discount?
Right. So the good news is if you're buying from somebody who's already a homeowner of that home, you're buying from the people who lived there before you, it'll carry over, or it should carry over. It should carry over.
That is key. It should, because we see a lot of people who don't have it.
Right.
And you end up then retro-filing for
Exactly.
it. So what do you think happens that it doesn't carry over, or that so many people are without it and don't know it?
So I don't know.
Which is why we're doing this podcast.
Exactly. So I don't know why it doesn't carry over, because it absolutely should. My only thinking is somebody down at the county building is just not putting the right information in the right, just not checking the right box when they're inputting the new owner information on this. It may be also the case that sometimes people are buying from like a foreclosure sale or from a some investor who wasn't a homeowner.
Yep.
And so therefore somebody didn't check the box to turn it over to, okay, this is now a homeowner.
All right. So to check, first let's tell them to check for you, see if you have your exemption.
Yeah.
There's what's called a PIN number, right?
Yeah, exactly.
And it's going to be on your tax bill. I think it's 2, 4, 6, 10. It's anywhere from 10 to 14 numbers.
Yeah. Looks like a Social Security number, but longer.
Correct.
Yeah.
And so you can go to the Cook County Treasurer. You go there. There'll be a drop-down box. You hit payments. Once payments come up, gives you the option to put in your PIN. Put your PIN in, click enter, and then you'll see your tax bill. And then if you keep scrolling down, you're going to see whether you've been filing for an exemption or to have a check off. So let's say it doesn't check off that I have a homeowner's exemption, and I'm living there. How do I apply for it?
So you apply for that by going to the Cook County Assessor's website. That's cookcountyassessor.com. I believe it's .com. It might be .gov. Pretty sure. Anyway, search Cook County Assessor. You'll find it.
Yep.
They have a thing. They have one of the tabs is called Exemption, and you can look on there and you can read more about all the various exemptions there are, and see whether you qualify for them. It's, if you're under 65, you really don't have any chance for any of the other stuff other than possibly the veterans exemption. But and then they've got online tools to apply for all the exemptions you qualify for. And you'll have to upload supporting documentation. Like you need to prove that you actually live there. So you'll need to give them like a copy of your driver's license that's got that address on it, or a copy of a utility bill that went to you at that address or something like that.
It's that easy.
It's that easy. And I had clients do it plenty of times. The one trick is if you bought from somebody who didn't get that exemption, the property has to be owner occupied as of January 1st of whatever the year it is. So if you buy a place in January 2nd, of 2024, for example, you're not going to get the exemption for 2024.
1 day off.
1 day off. January 1st. That's
so they don't do a calculation or a retro or anything?
No. Now, there's a different rule for new construction. For new construction, it's different. Like if you had a vacant lot and you built a new house on it, and there wasn't a house there until March 15th, and then you bought the house and moved in, then you're okay. Then there's ways around that. But for anything that was existing, it's January 1st is your date.
Okay. All right.
And further, one thing that you and I have done in the past that we should probably talk about is if you have forgotten to do this and like 2 or 3, 4 years have gone by and you haven't done it, you can get yourself a windfall, because you can go back and retroactively file for whatever exemptions you're entitled to. It's either it's the current year and 3 prior years.
Okay.
And that's money in your pocket. I've had clients do that.
3 times 7.
3 times 7, 21, plus the current year, 28.
How do I prove 3 years ago I was living in that house?
Well, hopefully you've got your driver's license from 3 or 4 years ago where you changed your address. Hopefully you can dig up utility bills from 3 or 4 years ago where you've got that address.
Online pretty easily, I guess.
Exactly. But most of that should be doable. They also have a affidavit of residency that you can fill out saying, I do solemnly swear that I was living here as of January 1st. Yeah.
Nice.
Now, legally, I can't tell you. You can use that to cheat the system, so I'm not telling you that.
Okay.
And I believe you do have to have some sort of documentation. So you actually can't use it to cheat
And
the
if I
system.
cross my fingers and my toes, is it okay?
Definitely not.
Okay.
Definitely
Okay.
not. Yep.
All right. Good
Yep.
to know.
Yep.
Good to know.
Yep.
So another topic
Yes, sir.
that I often struggle with myself is I appeal all the taxes. So I own my primary residence. I'm fortunate enough to own some other investments with my wife, and I'm always appealing my taxes.
Yeah.
And every time this attorney, which is great, he saves me money, so he tells me,
Yeah.
and I pay him a check, but I still see that my bill keeps going up, and he's just like, imagine if you didn't appeal your taxes.
That's the key.
So tell me what's happening. Tell me why I should appeal, when I can appeal. Tell us about that.
Right. So you can appeal. So let's start with when you can appeal first. And that is, you've got a very short window of time to appeal, and it's different for different properties because Cook County is broken down into, cities and towns and stuff that we all recognize. But it's also broken down into these things called townships, which are these little tiny sub-governmental entities that exist for no other reason that I can discern other than to make the other than to serve a role in the tax filing system.
Okay.
And the city of Chicago has, I think, maybe 10 or 12 different townships within it. And then there are some suburban townships that cover, like multiple townships, like a 20 square mile area. There's some suburbs that have their own township, like Oak Park and River Forest out in the west suburbs, each have their own township that is just the city limits for those particular cities. Anyway, whatever township your property is in determines what window of opportunity you have to appeal your taxes. And that's a 30-day window for each township for each year. Yeah, it opens on like, March 3rd and closes on April 3rd or something like that for each, And it's going to be staggered. So, one township will have one set of dates, another township will have another set of dates, and so on and so on and so on.
So I have to hit my timeline to appeal.
Yeah. And you'll find that information on the Cook County Assessor's website. The Cook County Assessor is where you're going to do all of this stuff.
Okay.
Yeah. So you can search for your property by township, and you can find that there.
And what determines if I get is it a discount? What is it?
So what you're appealing is actually the assessed value of your property. And assessed value is so there's this website I've been talking about called the Cook County Assessor. That's an actual government office, the Cook County Assessor. That's a person. And the Cook County Assessor's office, their job is to go around and figure out what they think the fair market value is of all the properties in Cook County. And they do that every 3 years. And that value is called your assessed value.
So how do they know what my value of my home is if they've never been in it?
Whole lot of math. They don't care about the inside of your home.
Oh.
They care about, because they're doing like 60 million properties. They don't care about the inside of your house. They're not going to come in. They're not going to come and snoop.
So they're not going to Zillow.
They're not nosy. No. What they are doing is they've got data on how many square feet you have, how many square feet of land you have, and how many square feet of house you have, and what kind of house it is, how old it is, what kind of material it is, how tall, how big, that sort of thing, and where it is. And as you know, in the real estate business, location is key, right? Mm-hmm. So, your house in your neighborhood is going to be worth different than a house in a different neighborhood.
Okay.
Yeah. So they put all that in, and then they look at what houses have sold for all over Cook County, all over, all sorts of different properties, what they have sold for.
Are they looking just a mile radius of my house, or are they looking all of that little township? What are they looking at?
They are looking at sales all over, but I believe, and this is where the math gets a little bit opaque because I honestly don't know what they're throwing into the hopper. But they throw what they're looking at is all sales everywhere and all properties everywhere. What they use and their process in doing that is to figure out what they think all the properties are worth at fair market value. And I don't know what the math is, to be honest with you.
Okay.
But they throw all that data into the hopper and come out with a number. All right. And that number is what they think is the fair market value of your house. And then the assessed value assessed value, this is a technical term, is 10% of that. So if they think your house is worth $675,000, your assessed value is $67,500.
Okay.
All right. And then that assessed value is one of the numbers that goes into your tax calculation.
And then what else goes into my tax
So
calculation?
what else goes into the tax calculation is something called the state equalizer. And that is a number that comes out of Springfield every year for every single county in Illinois. And it's different for every single county. And the reason for that number is that the various counties assess and value properties differently than Illinois state law says you're supposed to value properties. So Cook County, for example, pegs the assessed value at 10% of the value of residential properties, where it's supposed to be closer to a third. So state law says it's supposed to be about a third. So
they take my 67,000 times 10%?
they take your assessed value, 67,000, which we're saying is the assessed value, times a number that comes out of Springfield that is usually around 2.9, 2.8 to 2.9.
And that's the number they're using to hope to balance their budget to pay all the municipal employees, road repairs, schools, teachers.
Not quite. You're getting one more number. One more number that has to come into that. That's a number that is going to reflect your share of what the overall expenses are. And then what they do is they go to the various taxing bodies that have jurisdiction over your property, like Cook County, the township where you live, the city where you live, all these other things that the library fund, there's probably 3 or 4 other different taxing bodies that have jurisdiction over you, and figure out what their budgets are, what they need to pay their policemen, their streets and sanitations, all their services.
So we got the assessed value,
Yeah.
the assessor,
The equalizer. Yeah. And then the local tax rate is how much all of these people want from their tax money.
meaning what we need to pay.
Meaning what we need to
we
pay.
need to pay the staff and materials.
Exactly.
Labor and materials.
Exactly.
And then they multiply all that
Yeah.
to determine that.
That is
So
right.
the thing when I'm appealing my value.
You're paying your value, yes.
Yep. And which is really kind of interesting because in some aspects, we're arguing that our home's worth less
Yeah.
when we pay our taxes.
Right.
And we all do this.
Yeah.
And then when we go to sell our home, we're arguing that our home is worth more.
This is
It's a real push and pull.
It really is. It really is.
So let's summarize. We've talked about one is we get a tax bill, comes out twice a year. We pay them in arrears.
Yeah.
When we sell our home, we do a proration.
Right.
So we leave that buyer some money to go towards the lender to pay the tax bills when I own the home since I've sold it. Then we've talked about the importance to file your any exemptions you qualify because you get a discount.
Yep.
And then we've talked about the importance to appeal your taxes every 3 years to save you some money if you can, even though when you go to sell, you want to argue that it's worth more.
Exactly.
And that's why you hire me, because I can help you with that. You hire an attorney like Kobe to appeal your taxes if you like, or you can do that on your own, can't you?
Absolutely. It's very easy to do that on your own.
Yeah.
Yeah.
If you have the time, do it. I've never done it. I guess just because I think I'm better off helping people to support my family than I am trying to appeal those taxes. Anything else on taxes that we haven't covered that we should be covering?
That's really it. That's really
All right. You have more questions about taxes, give me a buzz, give Kobe a buzz. We're happy to help. If you like what we're talking about on this channel, be sure to hit the bell and subscribe. You'll be notified every time. Once again, on this channel, we talk about living in Chicago, buying, selling, investing, renting, and maintaining your home in a 4-season climate. Thanks for listening.